Thank you all of you for joining. I think what's great about the panel, besides the geographies and everything, everybody represents a different type of technology, a different type of relationship, either with the consumer on one hand, serving them, or on the other side, serving the merchants. As Cyprian coming from Munri and myself coming from a technology point of view, serving other financial institutions and merchant. We're talking about account to account. We want to see what's your approach. You think it's going to become more mainstream, or like the UK that started way back in 2018 and still the adoption is around 10%. And for that, we have Andra that understands better that UK market. And that part, I think let's start first, everybody, with a short introduction. And then I would like you to say in one word, how do you think the market would look like in 2030? In terms of the account to account and let's say transfer between it? Will it be fragmented? Will it still be, let's say, a converged together between it? Or it's going to be governed between, let's say, regulation that's going to connect all of them together?
Yes. We say that both.
Be closer.
We can say that both because mandate is a must for making the road of the payments. If there is no any mandate, you cannot establish an ecosystem. And also, but only the mandate cannot be enough, because you have to also build products to attract to change the people's habit. For example, in Turkey, we, as you know, established a 24 hours, 7 days payment system, fast. Yes, it changed many things in Turkey, especially in the retail side, in the banking sector. But only the establishment of this payment system is not enough. Banks build their own mobile banking solutions. They embedded this payment system to their mobile banking system, and they established different products for this QR, and also they combined with the QR. That's why we can say that mandate, yes, can create a way to do things better, but it's not enough. You have to also add some big contributions by establishing new products.
Cyprian, what do you think? It's going to be fragmented still, or it's going to become converged?
We are talking about 2030, if I understand correctly. So as we live in Europe, probably we can assume that it's going to be pretty much fragmented, because Europe is defined by fragmentation. But in the global economic context and political context, I assume there is going to be a pressure for aligning different fragments. So I would more bank on the federalization of the payment ecosystem.
2030 is quite close. So I think that looking now on the landscape, we see some initiative of collaboration between entities. So I think that in 3 years, it will be exactly as you said, federation. And they will already start to give the products to the clients, and we will see the main challenge, which will be interoperability between these entities right now.
Great. Kyle, what do you think? You're highly focused on open banking and transfers.
I think that with the time being, the market share of the account-to-account transactions will grow. So if you're talking about 2030, surely the market share of account-to-account transactions will be much bigger than it is today. And according to my understanding and the impression that I have, at least on the market in Southeast Europe, is that still there are going to be a lot of payment providers, because the markets are different. People's as users have different expectations from the services. Merchants needs different services. So according to me, it's going to be more fragmented and more evolved.
So the market I know the most is the UK, and it has its own specificities. So I would say that we were obsessed about infrastructure for a long while, UK started a program for modernizing the intra-bank infrastructure in order to create also cheaper alternatives, to open it to fintechs, other players than traditional banks. This program started in 2017, so before open banking. And if you look at it and if you read the reports about it, it's almost a story or a philosophical discussion about the future of money and technology and governance. We started with a big scope. Let's transform and let's unify all our infrastructure programs. At the moment, we said, let's just redo the fast payment system, which is anyway an instant type of payment. People are happy with it. But here we are. So if we learn something from that and project it in the future, we learn that infrastructure has very long life, longer than human life. That's why we think it's always like that. It will never change. You can hope that you can replace infrastructure, but in fact, what happens if we look, we are adding layers on it. So when I judge what happens in the future is how sticky is that thing that you are adding on. Can it function in parallel with what we have? And of course, does it solve a real problem? There is a pain there somewhere. And of course, many other things change, like open banking appeared. And there were lots of hopes that the account-to-account type of payments that open banking enables will, take hold. There were so many barriers that nobody has foreseen, a very convoluted customer authentication. The fact that we don't have digital identity in the UK. The fact that when you try to implement this in real life, you realize that your customer base has very old phones that cannot be used for the type of customer authentications that you envision. What do you do with them? Do you drop them all? Are they all vulnerable customers? So in general, I don't make predictions. I just take each initiative as it is and study it from many points of view, not only technology. They are social-technical systems, actually. Yeah.
So the next one will start with Cyprian, but then also with Antonina. What do you think about the fight between cards, account-to-account, and then stablecoin payments? So for me personally, I'm coming similar to you, payment gateway, point of fraud. For us, account-to-account is a fallback. A card transaction declines. We offer the customer the ability to pay with open banking or our alternative payment methods, try to save the transaction. How do you see that with the services you provide to merchants? Are they actually looking for that payment method in their checkout experience? And the same later on stablecoins as well.
I think it depends a lot whom you're asking the question to. So probably in most cases, there's no battle between account-to-account and card payments. But that's mostly because account-to-account adoption is at the beginning. So it's currently being seen mostly as an opportunity rather than a big threat. From a merchant perspective, I think merchants are definitely looking for alternative payment methods that can provide additional benefits to the card payments that they were used to. And will account-to-account be answering to their expectations or not? I think it's early to say definitely yes or no, or maybe in this form. But we are seeing a lot of initiatives and a lot of political support towards account-to-account, European level and local Romanian level. So it's likely to believe that account-to-account will grow. Exactly in which segments and what will be the benefits, it remains to be seen. But for merchants, definitely they are looking for solutions, and what they are attracted to are instant accessibility to funds, which is something they cannot otherwise access, lower fees. So I think there are compelling reasons for merchants to look into account-to-account payments. It remains to be seen other players in the market how they will adopt.
They're looking on one hand for the merchant to get faster finance. On the other hand, for the customer, there's a benefit for the card payment with the financing. They don't care that the merchant pays higher fees, but for them, the amount will leave their account only a couple of days afterwards in the next charge bill. And so kind of a trade-off. What would the customer prefer on their end in terms of cash flow against what the merchant would prefer in terms of the actual, let's say, cost of the transaction itself? Tony, what do you think about the stablecoin angle on that part?
When I think about stablecoin, I think it's kind of a game changer. And why? Because when we look at the innovation we've got right now on the traditional financial market, like SEPA, like Wiro, like Blik in Poland, and other initiatives like this, they are built on traditional finance. And that's mean that we always have this like two legs of transactions. So we got this message that with information about the balance, it can be instant. But on the other leg, we've got settlement, and it can be done other day at midnight, or if we're talking about some corresponding banking, it takes even few days. Yeah, and with stable coins and blockchain technology, we've got instant payment, which is already the settlement. So we've got everything in one place given by this technology. So that's why I think that we can think about what is better, account-to-account or card payments, but this technology is a deal breaker for me. And also what Andrea just said, that it is really it's a huge problem for each bank, I believe, right now, maybe not neobanks. Like PKO, we've got like 100 years already, and brokerage is about 30 years. So the infrastructure is old, and you don't have time to build a new infrastructure. You have to add another layer on what you have because clients need new products. And blockchain, from this perspective, it is also quite interesting solutions because it gives you new kind of technology, new kind of server, they have to be they have to interoperate together with the old infrastructure. But there are so many solutions that can automate your transactions that I believe that it will be a really important player in the future.
So let's say as an example, in Israel, we see a lot of, let's say, wallets coming through, but it's still that behind the scenes of the wallet, you still have a card that's connected with it. The acceptance becomes faster because it's an overlay on top of the card payment itself using a tokenized card, etc. So in Turkey, for example, with Fast, you have a lot of, let's say, aliases pick up for a faster payment. You see QR. That you think that these are the money revenue generating, because at the end of it, account-to-account transactions are not that much of a money revenue generator for the banks themselves. So you see the other overlays as the options, or a different method?
Yes, overlays must be because only the payment system cannot be alone a significant game changer. You have to develop many features on it, especially mobile banking solutions, wallets, QR, as you mentioned, alias addressing. These are the layers of this payment system, especially in Turkey. The fast facilitating since 2021. And it changed exactly the retail banking side totally. Because many banks have to implement many solutions on it, and then in Turkey the competition between the banks are very huge. That's why we can say that if you do not adopt the changes in your sites, you cannot compete with the others. That's why you should. That's why you have to differ from the others by doing something different. Especially the banks established 24 hours liquidity management solutions, and they also established new fraud monitoring solutions, and this made the banks a little bit go further to access the customers. at the beginning, some kind of banks cannot adapt the fast in their banking solution. That's why they lose many customers for that. That's why in my previous, I can say that in my previous experience, if you do not have customer trust, if you do not have qualified solution, banking solution, if you do not have fast payment system, you cannot attract the customer appetite. That's why you have to have an flexible, accessible, and user-friendly solution. I think the banks in Turkey did well, and they implemented all features in their banking solutions. Today, all banks have the same solutions, and you can withdraw money from other banks to your bank by this. Now, in retail side, the payments, 1/3 of the payments are in fast.
It's different when the mandate comes from the government rather than it comes from, let's say, local innovation.
Main thing is that, as you mentioned, the central bank's trust. Also, behind this, the payment system, the transfer bank is, that's why the customer trust is also very important. And it changes the behavior of the customers.
So Mikhail, with Irispace, so you grew a lot in the last couple of years on that part, but you also made a switch, not just from, let's say, C2B, customer to business, but also for B2B payments on that part. What made you make the switch? Because for our experience, it only works on B2B, and we don't see a lot of adoption on the C2B. What made you make the switch?
Actually, account-to-account transactions are growing very fast, at least in the region. What we observe is that from the beginning of this year, we have a growth of more than 200% in the number of the transactions and more than 3 times in the volumes of the transactions in the account-to-account transactions in Southeast Europe. And actually, most of the transactions are C2B transactions. Of course, not in all business verticals, but in some of the business verticals, especially in e-commerce and digital payments and wallets, where the account-to-account transactions based on open banking provides a very good UX for the customer. Of course, the merchants love account-to-account transactions. Being on SEPA rails, they receive money quicker, no dispute, no fraud, all that advantages. And it's the same growth what we see, at least, for instance, for the market in Romania based on RoPay. The same with Aris as a domestic payment solution in Greece. That's why our understanding and our operation based on the data we see is that the transactions account to account are growing fast. Still, their market share is not comparable to the market of the cards transactions. Still, there is a lot of work to be done. Merchants are adopting them quite quick. I think still users have to be more educated how they work, what this brings them to them. We see that some of the banks already started to make special initiatives to promote account transactions because banks can utilize these payment rails. I think that the best use case is for them. And this is what we see.
So Andra, for you mainly, so with VOP coming in with the verifying of the payee and that part, do you think it's going to be centralized as one, let's say, across Europe, or are we going to see 27 different, let's say, variations of it for every territory?
I have rarely seen centralization projects succeeding fast, usually, or at all. Actually, you end up with the old version and the new version and so on. Is this a huge barrier or it's through because of the fraud that is possible if you don't have confirmation of pay? I don't know. I think the solution could be technical. You don't have to literally bring the all the register in one. In a way, it's what we have now when we have many multiple standards for APIs calling various forms of integration with the banks. You can do the same. Probably the market could come up with the type of technology operators which provide this as a service. We can verify all the registers from all the countries. So I think it's more a matter of defining how to do it rather than shove all the data in one place. It's not necessarily probably I would say the old way of doing it. Yeah.
And I'm looking always at the customer point of view, both on the fraud side of things, because let's say with the card payment, if there's a fraudulent transaction going around, the customer is protected at that end. But with account-to-account payments, it's a little bit more challenging. Who bears the risk? Think the merchant should continue bearing the risk, or the customer because he doesn't have the way to reverse it, or later on for the merchant to have problematic in his account if a transaction was flagged as fraudulent? What do you think should be, let's say, the standard around that?
So if I'm not mistaken, and I might be, and you can correct me because you are in the business. I'm an academic, but right now. So if we look at the open banking type of operating, one of the problems was that for the first times, banks said, wait a minute, do you want the payment to be initiated from outside my real estate? And you still want me to bear the responsibility, talking to the regulator, to bear the responsibility? Because according to the regulation, it's the bank who needs to store absolutely everything about that transaction. And by doing so, to prove afterwards where the breach happened and whose responsibility is. And I can tell you that I worked on such projects before my academic life. And it was so extremely difficult to do this. And it requires such a change in the technology stack. Also, because as a bank, you were not accumulating information from outside. Now you wanted to know everything and to store it for I don't know how long, and then to be able to retrieve it and to prove it and to automate it. Because if you have even 500 such cases, you need to have an army of people if you don't automate the whole process. So where the barrier is, whose responsibility is, we will see. But you have to have a way of proving and storing the whole chain in order to do this. Doesn't matter what the infrastructure it will be. You simply have more players in the process, whereby in the traditional financial services industry, everything was integrated in a vertical chain. Everything what had to do with a financial transaction was in a regulated environment and in the same technology stack. So while we dismantle it and we have advantages from doing this through competition, innovation, and so on, we create risks that we have to manage somehow. Yeah.
We are talking with the merchants, and I will reply to this question from not a theoretical point of view, but from a practical day-to-day. And we have merchants that adopted account-to-account payments through RoPay. And I can say that never this topic occurred in my conversation with the merchant related to the fraud and security concerns. So this is telling me that the merchant in this case doesn't feel and probably has no risk because the money is in his bank account, and whoever owns the money doesn't have a lot of risk. So that means that the risk will have to go to the user. And in European Union, we know already that this is a very sensitive topic, and probably nobody would allow the risk to be on the user. So that means, by inference, that someone else will have to take the risk, not the merchant, not the user. So that's probably the scheme or the bank that is doing KYC. Yeah. So somewhere else will lie the responsibility, and I have not seen currently where that will be. And I'm curious to...
Michael, what do you think in terms as a PISP, when you have a conflict between, because we saw a use case that says that a customer complained that he allegedly didn't do the interaction on that part, and then the merchant itself got his account flagged because of complaints about money coming in from unverified customers. So it was kind of a conflict, and the PISP was stuck in the middle, not knowing, let's say, what the right hand or left hand is doing.
This is not an issue.
Right.
With our volumes, we have less than 0.0001 dispute of transactions or something like that. From the beginning of the year, we have less than 3 or 4 transactions, some dispute, because first they're instant. This is something that is very easy to solve the issue. Is there is a successful transaction or no transaction? Is it made transaction by the customer or not? And usually these issues, these 4 or 5 issues we have for half a year, or because the API of the bank was something not performing as it should perform at the moment. That was it. Or the API or the tool that we use for strong customer authentication. That's it. So in every business, there is such kind of issues in everything, even in the most secure things that we are doing. But this is not business related at these volumes. So I don't think this is a topic at all.
Iliad,
This is from my,
Iliad, can I ask you for a very short last round? Very short, 1 minute, you get 1 minute.
I just need to start the counter when we started. I have time. You're stealing time from me, but it's
Me too.
Okay, just
Antonina more on the stable side of things, with Mika coming in and travel rules verifying the, let's say, the senders on that part. So your angle closer.
exactly. I wanted to add my point of view to this discussion, because at the end we are looking for a solution. Where should we put the responsibility, whether to the banks, to the merchants, to the other fintechs that will provide you with new innovative solutions? And from my perspective, when we look at the regulation and they are as they are, I'm not sure whether it's the best way to not to cooperate with the banks. And for this, there are 2 examples, at least I have got in my head right now, which is Kivalis. It is first example, which is, in fact, it is fintech. It is a company based in Amsterdam, but the shareholders are the banks. So they are going to issue stablecoin dominated with euro. But what there is a huge potential for the scale of this stablecoin, because the shareholders are within 15 countries in Europe. Other examples in South Korea, which is also quite conservative regarding regulation and banking sector, and there they also decided to make a zero regulation zone for blockchain. But there's another project which is also run by fintech. They issue stable coins, which is really very good adopted right now. But also regulator there said, you can do it. We'll look how it works, but I want you to cooperate with banks. So another one example where banks are shareholders of such a fintechs. So I hope for what I started with this federation idea, because I see that there are lots of places now where we are discussing new model of competition, which is exactly collaboration.
You see, that's similar to what Visa and MasterCard are doing. When, let's say, open banking started, both schemes bought an open banking infrastructure. Now, following to our next panel, which we're going to be about agentic payments, both Visa and MasterCard started investing in the infrastructure itself to facilitate that. So it's the same thing, like the bank going into. Last question, because I did that on that part, and that's just a forecast. What do you think will pick up more in the next couple of years? More account to account or more stable coin payments in terms of a method of acceptance? Literally choose one and that's it.
Yeah.
Choose one fast.
It's not.
9.
I don't have a short answer. Whatever it is, whatever payment style, rails, wallets we are adding on, I think we should be mindful as players in this ecosystem that we cover the territory. So money and payments function within regulated territories. In fintech, we are guilty of developing solutions that we like, everybody here understands, but have poor adoption for many reasons that we don't bother to investigate. And we risk to develop yet the next cool thing, which could be a good solution, not communicated well enough, not usable for the most remote locations or vulnerable customers. So as long as we are not covering these things, the old ways will still remain.
So, Michael, yes or no? Account to
Coins against account to account. Stable coins for cross-border transaction, account to account for domestic transactions. That's it.
So I think the issue is the intermediaries here, and the methods of payment. As you said, stablecoin is the best example for me, where we go peer-to-peer, account to account is the future.
We are expecting the customers to migrate from a lot of solutions, and they don't have time to settle on one, from cards to gadgets, wearables, and wallets, and now to account and to stablecoins and so on. So I think it's going to take some time for the adoption, but in certain scenarios, accounts to account make a lot of sense, and I think they will catch, they will take hold in that those specific scenarios.
And the last one.
Yes, stable coins will be important for the use cases in the future, but central banks will determine exactly the game rules. That's why I'm saying that account to account will be important.
Didn't expect otherwise. Thank you very much for your time. Thank you everybody for being here.